Hello, everyone, and welcome to another roller coaster ride. My name is Cathy, Sabater, mortgage planner and proud veteran. So what interesting topic are we going to talk about today? Well, let's talk about the change in household debt in the last 17 years. We talked yesterday about what are the cities that had the highest rent. The day before that was like, hey, which cities have the highest home purchase price values? And to now, it's like, well, if you have all this debt, not all debt is bad, right? Sometimes you need to have debt, right? Because it takes credit to get credit. But interesting to know that student loans went up 546%, right? Now, how could this be? Because if you can look at the chart, it's showing it really started always accelerating. And there's been a lot of chatter in regards to this administration canceling federal student loans. At this point, it's not happening, right? Still have to spend the money we gave you from before and then come up with whatever plan is going to be needed. But 546%. So what are your thoughts? If you've had your student loans since 2003 and you still haven't paid them off, should we help you? Should we get that monkey off your back? And those people who are creating debt right now, what should we do, right? Because remember, the pandemic made people make a lot of different choices, right? Some people said, hey, I'm not working right now. Let me go to school. Let me learn another trade. Let me do something different, right? So let's talk about auto loans. Auto loans went up 114%. So how can that be? Well, I'm still driving an older car. I don't have a car note right now, but I don't have the technology that all the newer cars have. Before in the day, right? Back in the day, you could buy a car and the car loan was maybe 3 years, maybe 4 to 5. Now, because of the technology and the cost, just like building a home, the cost of building the car and also maintaining it, it's higher. So there are people out there with 5, 6, 7, 8, 9-year-old long-term car loans, right? And then mortgages are up 103% in the last 17 years. We understand what happened in 2008. People are saying, hey, is it a bubble? Is it a bubble? The difference between the two is what? You should know. Inventory. There is not enough inventory. But there's going to come a point where I think we're going to start tapering. We're still going to have appreciation. Appreciation is going to continue. But I don't believe it's going to continue this way. I believe it's going to go like this and be more reasonable, right? Because some sellers think that they're overvaluing their home. But let's get it right. People are willing to make that payment. And if people are willing to pay, then for them, it's not considered overvalued, right? They're saying, listen, I want this house for whatever reason. And if it's going to cost me this much more, and even though if it's not appraised at it, I'm going to do it. It's just like people buying these cars, right? You're buying a car, it could cost $40,000, $50,000, $60,000, $70,000. Well, it's great that you do it, but then you should also say, am I renting? Or do I own? So that's the difference in priorities in whatever lifestyle that you want to enjoy. Because remember, when we talked about the different cities, somebody was paying like $4,200 a month in rent. That's the lifestyle that they want. So if you can afford it, do what you need to do. Okay. So with that being said, not all types of debt are bad, because sometimes, most of the time, you want to purchase a home, want to buy something, you need credit to get credit. Not only that, like we just talked about. So if you're going to buy a car, 20, 30, 40, 50,000, you have to spread it out because you got to make your payments reasonable. Okay. So what's going on with mortgage-backed securities? Well, we took a little, you can see that it's all green here, but when you look at the chart itself, right, we're still trying to go through these levels of resistance and support, right? So you can see right here, we're right down at this level of support. And we may just continue to go down. If this goes down, it's the opposite with mortgage-backed securities, right? So if you're in a purchase, tomorrow is the jobs report. So we'll see how it affects mortgage-backed securities. You either lock or you float, right? Because purchases, you have timelines. Refinance, you decide on the interest rate that you want, and then you float until you get what you need. Stay safe, and I will talk to you soon.